Good morning, Footprints traders. Welcome to another Markup Monday. It is Monday, 26th of January. Let's start marking up our NASDAQ. And as you might have seen, quite a reaction on the opening. It made like a 300 pip drop, and it's already back to the level where price was on last Friday. Let's mark up the chart, see which levels are still on there and which levels we can add to it. We still have a level here from 13th of January, POC. We got some liquidity just below it. Here, like equal highs. Just checking the levels, POC was mitigated. This one as well. And we have a POC from the 21st. Let's mark that one up. Volume spike here. But yeah, it's already mitigated during this opening from this morning. What other levels do we have? No POC. Well, price is right now at the POC from last Friday. Let's just check what the reaction was on there. Let's go to the 5-minute. Price went to the level, really nice. We had some volume increase, we had a nice green delta, and then next candle was red delta. But no stacked imbalances. You can automatically see that with the indicator that I'm having. There is nothing. Otherwise, you would have seen certain dot right at the top of this candle. So no stacked imbalances, which means this key level is no longer interesting. So I'm just deleting it. Let's go back on the 15-minute. Yes, I am marking up this spike right there. I think if I'm putting on the indicator, dynamic levels, it would definitely show, yes, exactly. Definitely show some volume right there. Do not see any other interesting levels, so this is kind of it. Got the POC from the 21st, POC from the 13th, and we got a volume spike from last Friday. Let's put the indicator off. Okay, so this is NASDAQ. Let's go to S&P. Oh, we still got some levels on from previous days. POC from 15th, 16th, really nice. Got liquidity here, like the equal highs from last Thursday and Friday. Price also made quite a drop on the opening, but already restored until the price from last Friday. Also touched POC. Let's double check the reaction there. Let's zoom in on the 5-minute. Oh, same as on the NASDAQ. We got quite some volume increase. Lovely green delta, so the next candle needs to be red. Or at least we should see the shift when it's on the key level and reversing from it, like it's rejecting it, like the sellers are stepping in. But as we see, price just keeps on going higher. We do see imbalances, but they are not stacked, meaning they are not at the top of this candle for a sell. They're in the candle, which means to me that price will only go higher. So this level is also no longer interesting. Let's remove it. Let's go back to the 15-minute chart to see if there are any other levels that we can mark up. Just want to double check with the indicator dynamic levels. It does say here as well, here at the top. Just like with NASDAQ. But I am marking the one up a bit lower. Stands out a bit more. And price was hanging around here quite longer during the last hours of Friday's session. Okay, anything else? No, I think that's it. Let's put this one off. And then this is what we have. POC from 15th and the 16th. Some equal highs here, meaning liquidity above. We got a spike from last Friday and a POC from the 21st. All right, last one. Let's go to gold. Okay, we still have some levels on the chart and this price just keeps on going up. Unbelievable. Last Friday I said in the Delta family group, like, is gold gonna be to 5,000 next week? Well, it did. And it's actually already it already mitigated 5,100. Crazy. Let's mark up the other levels that are not mitigated yet. I see instantly 2 levels from last Friday. This very strong volume spike. As you can see, price has been hanging around there a lot. And of course, the PSC itself. Yeah, that's it. POC from 20th, 22nd we got a spike. And then from last Friday we got the volume spike and the POC. And nothing above it because, yeah, gold is at all-time high. Crazy pair, crazy. I'll put the markups in the server. And if you got any questions, let me know down below in the comments. And happy trading week!